Welcome back to Legitimate Targets, everybody. I hope you're all having a great day. Joining me today on our episode to talk about all things China, U.S. trade deals, the deal with no details, I'm calling it, because so far there's been no details, and we just get a regurgitation of the same talking points every few weeks, is Einar Tangen. He is an American lawyer, political and economic commentator, and senior fellow at Taipei Institute, based in Beijing since 2005, known for his work in international media and contributions to Chinese policy discussion. So, Mr. Tangen, thank you so much for joining me today. How you doing?
I'm doing terrific, and thank you for having me on your show, Jackson.
Of course. It's a great honor to have you here. And maybe you can help make sense of what is going on right now between the United States and China, because you have, on the one hand, Donald Trump coming out and saying that he signed the best deal, the biggest deal, the greatest deal. On the other hand, you have a lot of silence from the Treasury Secretary Scott Bessent, and from the Chinese, similar level of silence, a few comments from the Chinese. So what is really going on here?
Okay, so go back a few months. There was this agreement to have a framework. And then Donald Trump started imposing more sanctions, saying he was going to kick out Chinese students, et cetera. And that didn't really play well with the Chinese, this idea that I can come up and say, hey, let's make a deal. Meanwhile, let me kick you in the shins and slap you around a little bit to soften you up. That doesn't really play well in Beijing. They're very aware. Donald Trump. They've been studying him now for 8 years. The first time when he was elected, they were surprised. I mean, they expected the China card to be played in the political run-up in the elections, but they weren't really expecting that he would go against economic self-interest in order to kind of push this narrative. So that was the beginning. So they get to the point where China toughens up a little bit and says, hey, you got to knock this off. And then they have another meeting. Of course, rare earths figure into that. Just as a side, Jackson, can you explain something to me? The world operates on a system where everybody keeps track of everybody else's trade. Everybody knows what every country has to offer, how much they're selling, how much they're buying. And it's not just the countries. You have the World Bank, WTO, IMF, everyone's keeping track of this. So in essence, all the cards are on the table and they're face up. Everybody knows what's going on. Mm-hmm. So, I was just completely befuddled when they came out with this idea, China has rare earths. They have 90% lock on that. This could affect our industry, as if this wasn't true before. And this is really kind of odd behavior. Anyways, push that aside. We get to this point where they say, okay, knock it off. We're going to do a framework. And then we're at this point where Donald Trump is taking a victory lap, although, as you said, an agreement with no details. I'm a lawyer. I was a politician. I was an investment banker. Generally, I like to know the details because without the details, there is no deal. In essence, what happened is they've, keep agreeing to this framework. And part of that framework is okay, we'll continue working on this framework. China says to Donald Trump, you need to drop some of this, the fiery rhetoric, and you also need to stop attacking our students and get rid of some of these kind of silly tariffs. In exchange, we will allow rare earths to go out for, in my guess, even without seeing it, they're going to say for non-military purposes. Cars, et cetera, and we'll be monitoring that, and people can apply for an exemption, much the way the U.S. does with technology like ASML, even though it's not even in the United States and it's in the Netherlands. So that's where it is now. Overall strategy. What are we talking about? China's slow playing the U.S. Donald Trump is going to be here for the next 3.5 years. There's no rush to make a deal because the only thing you know for certain is that once you've done a deal with Donald Trump, he'll be back at the table the next day insisting that he wants a better deal, wants to change the deal, or that deal didn't include some other things that he's now pressing. And, if you need an example of that, look no further than Mexico and Canada. And
Mhm.
remember, when he walked away from TPP, the Trans-Pacific Partnership, which was there basically to protect U.S. interests. When he walked away from that, that threw everything into economic disarray with Canada and Mexico, because that was supposed to replace, the agreement that had been settled by them. So he then, remember, he described it a big, beautiful, the best ever agreement that he negotiated. Similar words, actually.
Yeah.
And then 4 years later, he says, that's terrible. I'm ripping it up. I'm hitting you with more tariffs. You guys are horrible people. You're horrible neighbors. You're just trying to make us into drug addicts and put your criminals into our backyards. So China's learned from all this, and they say, okay, we have 3.5 years to deal with this individual. There's no point going quickly. I think in the end, what you're going to end up with is China is going to go for a phase two. And the question is, why go for a phase two? I mean, phase one didn't exactly work out. If you go back 2.5 months, China put out a white paper where they had 6 points, and they were talking about the trade war and the relations. One of those points was entirely devoted to the failures of phase one. Well, the question is, why would you talk about a failure when you're talking about going forward and trying to figure out the next step? This was an open invitation, a hint to Washington that the solution in the end is going to be a phase two. And why is that good? Well, it's good for Donald Trump because then he can claim that he was playing 16-dimensional chess, and she was playing tiddlywinks. Victory! I'm the greatest deal maker ever. This is what I always wanted all along, because he never articulates what he wants, so he can always claim victory. So it's good for China because it's transactional. If he breaks the deal, the buying stops, and he has no one else to blame but himself. So this is one way of trying to keep him, sticking to the deal. But they're in no hurry to get this done because, as I said, the only thing you know for sure about Donald Trump is it's never over. He's going to continue coming back to the table, insisting that this agreement doesn't cover that. If you want that, you need to give me more concessions. And China, they know the game. And they're the adults in the room, and they're just, as I said, slow playing.
When you say, just to clarify, phase two of a tariff sanction, war, or phase two of what are you saying?
Oh, I'm sorry. Phase one, the phase one deal refers to when China agreed to buy billions of dollars worth of agriculture and energy from the United States. They also wanted to buy technology. But as soon as the deal was done, what did Donald Trump do? He says, no, you can't buy technology. Well, it's like saying, I want you to run a race as fast as you can, but with one leg. Okay.
So that was part of the idea that Bessent had, right? China's
long time ago. This is Trump one. No, this was Trump one. His first term.
Oh, Trump
first term. Yes, he did this phase one, and as soon as he concluded the phase one deal, which China said they would buy a lot of U.S. agriculture and energy, a couple of things happened. One, he started slapping sanctions on China, and two, then you had COVID. So between those two things, phase one never got completed. China didn't continue buying because they didn't have the demand, et cetera, and because he had put on additional sanctions. As you may recall, under Trump 1, he was claiming that he was using the tariff money and he was giving it to farmers to subsidize them for the losses due to the loss of the Chinese markets. So phase two would be a continuation of that, a new deal where China would promise to buy a lot of, I assume, more agriculture, energy. Those are the things that the U.S. can produce. But China is not going to buy at above market prices. That was an issue last time. The U.S. said, no, you just buy it at whatever price we want to give you. Obviously, China's was born at night, but not last night. So they said, no, we'll buy at market prices. If you can meet the market prices, we'll buy from you on a preferred basis. So phase two, as I said, it's kind of checkpoint Charlie. You honor your side, I honor my side, and it's day by day. In the moment you stop honoring your agreement, we stop honoring ours, and then we're back to square one. So this is where it stands. I mean, Donald Trump has a lot of concerns. One, his base. He had promised them he was going to control prices. That's not really happening. He's promised he was going to make their lives better. That's not happening. And he said he wouldn't get into forever wars. That's not happening. And the big gorilla in the room is that the US dollar has depreciated by 10%. Well, why is that important? Because the United States is the trade currency of choice in the world, but it's supposed to be safe, all right? Treasuries are supposed to be safe, and the US dollar is supposed to float within a very narrow range because it's a steady currency. Because if I buy $100 worth of currency, US currency, and then 6 months later, it's only worth $90, I'm not going to be happy. I just took a haircut of $10. Didn't earn any minimal interest. So what does that do? Well, if I'm anticipating, as Trump keeps saying, I'm going to continue to depreciate the dollar to make US goods more attractive, lower price, obviously a weaker dollar, US goods are less expensive. If he continues to do that, why would I want to buy US dollars? Or if I buy US dollars and I put them into treasuries, I want to make sure that I get my profit, the interest, plus I have to figure in how much I'm going to lose on the currency. So you're going to start to see very, very high prices for treasuries. That means the US is going to be paying a lot more for its debt. Its debt is already 1 trillion plus, right? It's going out for literally a third of its 36, about a third of its $36 trillion in debt in the next couple of years. If that interest rate is 3 times what it is now, you're going to, in essence, double the amount. The U.S. budget is just under $6 trillion last year. 2 trillion of it was borrowed. 1 trillion, a little under 1 trillion went to the War Department, and the other trillion went to pay interest. Can you imagine if you have 3 trillion? Because he's increased the amount going to the War Department. So that means it's going to be about $1.2 trillion. And then you have another $2 trillion. So out of your budget, your revenues are still going to, actually his revenues are going to go down because of his tax breaks and things like that. So you're going to see decreased revenues around maybe $3.5 trillion, trying to support a budget that is going to be around $7 trillion. And that means it's all going onto the debt pile. That does not make people feel confident in the US dollar. And that's the big gorilla in the room. Bessent has finally explained to him that when you do A, B happens. And Trump has some sense of that now. So he's doing what he can to save face, say that I won, China lost. But the reality is that China is playing him, and he has very little choice.
Do you think that's the biggest strategic difference right now between China and the United States, in that the United States, a great deal of the debt that is paid by the United States on an annual basis is to this cabal of finance capitalists and global creditor class, which is unaccountable and doesn't answer to the demands of the American people. Whereas China, who has a different mode of economic production and is focusing on this Eurasian industrial integration, they don't have anything of the sort. They answer to the demands of their people. I mean, this seems like the biggest issue to me, but what do you think?
No, I think you hit it on the head. You have two very different visions of the world. The United States right now, under Donald Trump, believes that you build walls. You don't build bridges. You pull in. You make other people pay for the things you want in terms of a bigger war machine and things like this. Get them to buy your war toys. And it's this idea that you can somehow extract value from the rest of the world. Now, this goes back to colonialism. Remember, that was the whole idea. It's just I go someplace and I tell them, I'm big, you're small. Unless you, agree to my demands, I'll come there and, basically beat you up. And there's plenty of instances where the U.S. has done that. So people aren't, it's not that they don't think the U.S. is bluffing. So a lot of them have, in essence, given their lunch money to the schoolyard bully. And that's kind of, that's the U.S. approach. It's an empire. When we have a problem at home, regardless of what the problem is, what we try to do is go abroad and find somebody and take their lunch money and then distribute it at home, hoping that will appease the people. But in this particular case, that game is over. There's nothing that we can get from other countries that's going to make us competitive because there are, structural differences. Now, I have another aside. I'm sorry. How did this all come about? Remember, there's this narrative that China went and stole all these jobs from the United States. This goes back to this point. A strong dollar means that you can borrow cheaply. The government can borrow cheaply. And the stock markets do really well. That goes to your point about this cabal of financial people who are floating above it all, who gained $33 trillion over the last year and a half in wealth. It's the top, 0.01%. They really needed an extra $33 trillion because they just really didn't have enough trillions to begin with. Anyways, it was really good for them. That's where a lot of these trillions came from. Mm-hmm. But what it does is a couple things. First off, strong dollar means your goods are more expensive, right? You already have a situation where American wages are much higher. Do you know American wages are 33 times higher for an hour's worth of work than it is in India? It's 5 times higher than it is in China. And, those are two, different areas. But my point is, with that kind of difference and the higher costs of construction, et cetera, the U.S. became non-competitive. It doesn't mean we stop producing. We're still one of the largest exporters in the world, but we export things where we have an advantage, a competitive advantage, generally through some sort of IP like that. But that means so much of our industry that was just competing worldwide, whether it was sneakers or clothes or things like that, had to go somewhere else. Why do I say had? Because there's no choice. If I have a factory in America and I have a competitor in Europe, my competitor in Europe goes to the lower price market and starts, they're going to eat my lunch. They're going to take my business. They're going to undercut me in terms of price. And there's no difference in terms of quality. And at that point, the game is over. I'm going to be out of business. So if I'm a company, an American company, and I want to survive, I have to go abroad. But this was a deliberate choice that was made by our dear politicians in Washington. They just said, well, it's good for us. These big companies, they make lots of money. And by the way, they're the ones who give us contributions. They employ a lot of people. They're very influential. So when you say cabal of mixed interests, all right, it's not just the financial, it's also the political ones. I mean, you start looking, go down a list of all the prominent economists. Where were their voices prior to the market crash? Well, if you go down the list, guess what? They were all working for these investment banks. They had been, in essence, co-opted because it's much cheaper if you're earning hundreds of billions of dollars, paying somebody, $750,000 to $500,000 is peanuts compared to what you're making. So they co-opted these people. It was very smart on their part, but it means that the public and the government was deprived of the early warning signals that were there aplenty. So getting back to your things, what does China represent? China is not perfect. I mean, this idea that, it's the idyllic society, it has its problems. There's one major difference, though, and that is when China sees a problem, they think, okay, how do we solve it? They don't always succeed on the first attempt, but they keep trying until they get it, like poverty, extreme poverty eradication. According to UN, if you go back 20 years, it's impossible. Don't even try, right? It's not practical. There's always going to be poor. Just let them be poor. It's part of the system of capitalism. But China was able to do it, and they still have one of the most competitive marketplaces in the world. So this idea that you can't is something that people put in their head. The strongest prison we have is between our ears. Because if we believe we can't do something, we're not going to try, and it's certainly not going to happen. So China represents, they've been doing this Belt and Road Initiative. They believe China's future is they have to import resources, and they have to add value to them, and they have to export and use themselves those resources into value-added goods. So they need a peaceful world. They need a world where people are working together. They're not interested in pushing an ideology. They don't say that they're the lighthouse on the house on the hill, with some spotlight on it from God. They just say, we have our own system. You can study our system. If there's anything useful to you, fine. Otherwise, what we want to do is trade. And we believe in order to trade, we have to help you. We have to build markets in addition to buying resources. So, for instance, China has the only import fair in the world where you literally have 190 countries showing up, representatives saying, how can we sell to you? Even countries that aren't favorable, the businessmen show up and say, hey, I'd like to sell you something. I mean, there's no other country that says, in the US, we say, oh, we don't want to buy anymore. China is quite the opposite. They're saying we want to buy more. Now, did China have restrictions in the past? Yes, they did. When they were developing, they kept out certain companies. And we know those. They kept out Google. They kept out AOL, a number of them, Amazon. And it proved to be right. They developed local champions. They did not want that trade controlled from the US. And there are reasons why. Once you get to a certain point in the market, you and maybe a couple of other competitors are no longer competing. What you're doing is extracting value, all right? You're taxing people for it because they have no choice. Competition is supposed to create choice, but actually competitive systems unchecked create a situation where the very large have a monopoly or an oligopoly, and they do it. And this goes back to your cabal of financiers and things like that. Everyone's aiming to control markets. They're not interested in competing for them. Competition is great when you're small. When you get big, and you just want to kill all competition. So this is two very different ideas. China believes that the world is a multipolar world, that it's already arrived, that there has to be alternatives to the US if it's going to continue to try to bully other countries. And that in terms of trade dollars and systems, the US weaponized SWIFT, which is the banking system settlement. So when you send money overseas, there has to be some way of settling that, making sure it's secure. That was the SWIFT system. And the US promised when it was created that it would never be weaponized. But they also said the dollar wouldn't be weaponized. Banks wouldn't be weaponized, but they have been. So it's one of those situations where it can be quite seductive to believe that you can use these tools in this way, weaponize them to get short-term goals. But in the end, you're undercutting confidence in the system that you built and you depend on. And when that happens, you're really cutting short your future.
And speaking of that, I have one last question for you. You were talking about U.S. Treasuries earlier and the rise in the U.S. national debt. Will there ever come a time when the system of super imperialism, as Michael Hudson describes it, where you have the U.S. flushing foreign economies with U.S. dollars, then those U.S. dollars get stuck there, and the U.S. bullies those countries, or in some cases, they're incentivized in some way to buy U.S. treasuries and finance the U.S. war machine and the U.S. economy. Will that system ever become dead? I mean, you have obviously the ideological interests of sovereignty in these countries. Hopefully, they would want to avoid dollar trade, overwhelming amounts of dollar trade, and having their local economies flush with U.S. dollars. And maybe they'd want to invest in their own economies rather than buying U.S. treasuries. But also, you mentioned the fact that with such an increase in U.S. debt and these treasuries becoming more expensive, will there ever come a time when it is actually no longer feasible to really have your economy operate in this manner?
Yeah, and I think you've hit it on the head. I mean, let's go through this systematically. Right now, central banks, the banks of countries, have the lowest amount of treasuries that they've owned since 2011. Now, why is that important? If you look at the financial crisis and the aftermath and things like that, that explains that. So when the overwhelming part of this debt is not being held by foreign entities, and they don't hold the majority is actually held by the United States. And Bessent has said, category, we control the printing presses, we can always pay interest. All right, but the question is, what is that interest at? All right, and what does it mean in terms of how it's going to be paid back? I went through earlier this idea that when your revenues are $3.5 trillion and you're spending $7 trillion, and you're borrowing the deficit, you're in serious shape. The interest rates start to rise. So let's say they rise to 15%. Right, that would be basically 5 times where they are now. Can you imagine? Now it's not exactly correlation, but all debt that was being refinanced and new debt would be going out at 15%. I mean, that just continues to eat away at your budget, and you continue to borrow more. So, what is the definition of a Ponzi scheme? Ponzi scheme is I have no way to pay back the money. I just simply borrow more money to pay the interest on the money that I borrowed. And in addition to that, I'm borrowing even more money. So the United States has for quite some time, in addition to being a rogue state, has been a Ponzi scheme by pure definition. Now, it's able to maintain the facade, but once the private sector says no more, we don't want U.S. treasuries, they have to keep pumping up the interest rates until it's not even feasible to pay it. And the more money you dump in, the higher the interest rate's going to go. So at 15%, if they're printing off, $3 or $4 trillion a year to pay the interest, all right, that increases the debt. People have less confidence, and then they say, okay, I need 20%. So you have this escalation that could lead to a situation which we've talked about in Germany during the post-World War I period. We've seen it happen in places like Argentina, and no one ever thinks that it can happen in the U.S. And you have people like Bessent who say, "Oh, I'll print. I'll keep printing. Don't worry, I'll keep printing." That's not an answer. Has he ever said once that he has a solution to paying down the debt. No, none. Just I can print more money. And that, as I said, is a dangerous path that will lead to an escalation that could literally put the U.S. In an inflationary cycle that would take years to unravel. And unfortunately, because of the U.S. position in terms of global demand, it would really affect other countries.
Well, I don't hope for economic crisis, but I hope that something big happens that forces the U.S. to change its way and rethink our economy, because it's not working for normal people, and it's not working for small businesses. And as I said, it's entirely unaccountable to the public. So, Mr. Tangen, thank you so much for joining me today. I think that's an excellent point to wrap up on. Beautiful analysis. Where should people follow along with you online if they want to stay up to date with your work?
The Asia Narrative Substack. That's
very good. I'll have it linked.
All right. Thank you, Jackson. Really a pleasure. I always judge things by the questions asked, and I like the fact that you put making it simple, easy for people to understand. Because people and my thing, it can be very, very tempting to talk in a lot of jargon and to talk above people, because I'm a professional lawyer, investment banker, politician, I'm used to dealing with people who are talking in this kind of nonsense. And I really appreciate the fact that you're cutting straight to the point. You hit and say, well, what does that mean? And I think that's extremely useful in today's date and time.
Well, thank you very much. You broke it down great. So we'll have to speak again. Hopefully, maybe the U.S. will come to their senses and we'll have a real deal with some real details, and we can speak again soon. So thank you.
All right. Cheers.